Good morning, students. So, students, today we are going to discuss a very small standard and a new standard in IND AS 34 interim financial reporting. Students, today I'll cover this entire standard in this Excel file, right? So, I have a lot of questions and I have a lot of practical questions as well. And I'll also discuss Infosys annual report or Infosys financial statement, interim financial statement to give you the live examples of this particular standard, right? So students, IND AS 34, interim financial reporting. You remember when we discussed IND AS 1, I have told you that as far as structure and content is concerned, IND AS 1 is not applicable to interim financial statement. But as far as key features are concerned, IND AS 1 is also applicable to interim financial statement, right? When I'm talking about structure and content, you guys have well understood so far. Structure and content means how the balance sheet will look like, how the P&L will look like, how the statement of changes in equity will look like, how this cash flow will look like, and what sort of notes to accounts will be there, right? And what should be the minimum content line item should be there in each of the component of the financial statement. You all agree with me? So this is the meaning of structure and content of the component of the financial statement. So if a company is preparing interim financial statement, interim means less than 1 year, right? Annual financial statement is for 1 year, for full year. For annual financial statement, IND AS 1 is completely applicable. But for interim financial statement means the financial statement which is getting prepared for less than 1 year. For example, listed companies. Listed company used to publish their results on a quarterly basis as per the SEBI regulations. Okay. So they need to prepare the financial statement on a quarterly basis. Okay. Friends, when they are preparing the financial statement on a quarterly basis, for example, for the June quarter, then quarter and half year ended or ending September, quarter and 9 months ending December, and then full year. So in this June, September and December quarter, where the company is preparing the financial statement for a period which is less than 1 year, it is known as an interim financial statement. And on interim financial statement, IND AS 1 is not fully applicable to structure and content of these financial statement. Why? Because IND AS 34 itself has provided the structure and content of interim financial statement. But as far as key features are concerned, what could be the key features? You remember there are two aspects in IND AS 1, structure and content, right? Structure and content. And second one is key features. Key features. So first we have covered the key features in IND AS 1 and then we have covered the structure and content, right? So friends, as far as key features are concerned, like what could be the key features? True and fair view. You remember explicit and unreserved statement of compliance. True and fair view is the key features. Going concern. The financial statement has to be prepared on a going concern basis. Financial statement has to be prepared on a accrual basis. Consistency. The accounting policy presentation should be consistent from one period to another. Right? Offsetting. If standard permits, then you can offset asset and liability, income and expenses. Okay. Then materiality. Material item has to be presented separately. Materiality and aggregation. So what is these items? These items are, friends, key features. So if I'm talking about key features, of course, IND AS 1 is also applicable to interim financial statement as far as key features are concerned. Doesn't matter whether you are preparing quarterly financial statement or annual financial statement, your financial statement should be prepared on an accrual basis. It is the requirement of Companies Act as well, right? You understand that? So as far as structure and content is concerned, so IND AS 34 is applicable to interim financial statement. IND AS 1 is not applicable to interim financial statement. So you guys need to understand this practically as well. Why? Because the name of Ind AS 1 is presentation of financial statement. So probably you will think of, acha, if we have to prepare the quarterly financial statement, whether Ind AS 1 is applicable. Yes, it is applicable, but only to the extent of key features. To the extent of structure and content, Ind AS 34 has given some sort of guidance. Okay. So friends, interim financial reporting, interim means a period which is for less than 1 year, right? And financial reporting, you understand, financial reporting means structured presentation of financial statement is known as a financial reporting. So normally this standard is applicable to the listed companies normally. Why? Because listed companies by the SEBI regulations are preparing the quarterly financial statement or interim financial statement. Okay. Sir, whether this standard is applicable to the companies other than listed companies, many companies, right? In my initial days of career, I was working in a company. That company was not listed company, but its holding company was listed, right? Just to support the holding company, this company was also preparing the quarterly financial statement. So if a company has decided or chooses to prepare the quarterly financial statement or interim financial statement, then this standard will become applicable, right? So friends, listed companies are reporting on quarterly or half yearly basis. Interim period is period for less than 1 year, say quarterly, half yearly, 9 months ended. Okay. So this is known as a interim financial period, interim period. Okay. Right. I can see a lot of students have joined. Vanshika, Yedukona Kandolu, Gauri Sankar Rao, Mansa, Shruti, Tanisha. Good morning to everyone. Let's move on. So, friends, whether Ind AS is applicable on results to be published as per SEBI requirement. Friends, you must have seen that normally what happens, the companies, right? The companies file the results on its website and file the results on the stock exchanges, SEBI, Securities and Exchange Board of India, to the stock exchanges. So, friends, you must have seen the results, and these results are just 2-pager or 3-pager results. Okay. But if I talk about the financial statement, it is a large financial statement which consists of 30-40 pages. Okay. But the results only consist of 3 pages or 4 pages maximum. Right. And these results are going to be published as per the SEBI requirement, is going to be filed as per the SEBI requirement. You understand that? Yeah. So let me show you one of the results. I am just opening that the results which is filed as per the SEBI requirement. Friends, let me know if you are able to see this screen. I have just opened the Infosys website. I just want to show you the results as per the SEBI requirement. Just a minute. Infosys September 22 results. Just give me a minute. I'm trying to find out that those results. So this is the financial statement. I'm just trying to find out the results. So let's leave this. Let me show you the other results. Indus Towers financial results. Yes. Yeah. Quarterly results. Let's go to 22-23 and let's go to the September quarter. Let me show you the September quarter results, published results. Friends, are you able to see this file? Are you able to see the results? Are you able to see the results of Indus Stars? Please confirm. Is it visible? Whether the results are visible? Just a minute. I'm showing you. Just wait for a moment. I hope these are visible. Yes, I think these are visible now, right? Is this visible now? Okay. So you can see that in these results, right? You can see that these results are statement of audited standalone Ind AS financial results for the quarter and half year ended this, right? Quarter and half year ended. So they have given the quarter ended, half year ended results. Okay. And this is the P&L kind of a format. This is a P&L format. Okay. So these are the six columns. These are the six columns in which the results have been given. Why these are the six columns? Because this is the requirement of SEBI regulations. Okay. Then some notes have been given. Some notes. The above financial results for the quarter and half year ended have been reviewed by the Audit and Risk Management Committee at its meeting held on this date and approved by the Board of Directors at its meeting held on this date. Then they have given statement of assets and liabilities. It is a balance sheet, but the word used in the SEBI LODR is statement of assets and liabilities. So only balance sheet is given, no notes, nothing. A statement of cash flows is given, right? And few notes, right? Few important notes. Then there is a requirement of SEBI regulations of about some ratios. So that has been given and the explanation of ratios have been given. So apart from that, nothing is there in these results, right? These results have been prepared as per the requirement of SEBI regulations. You can see these are the just 9 pages results, including the audit report, right? And you can see the auditor has also written that we have audited the interim standalone financial results, not interim financial statement, interim standalone financial results for the quarter and half year ended, included in the accompanying statement of audited in standalone Ind AS financial results for the quarter and half year ended this of Indus Stars being submitted by the company pursuant to the requirement of Regulation 33 and Regulation 52 of the SEBI Regulations 2015. So these results have been prepared and filed by the company as per SEBI regulations, right? This is what I wanted to tell you guys, right? So these are the 8-9 pages results. Okay. So now coming to these results, the questions which I was having, that whether on these results, whether Ind AS 34 is applicable on these results, whether Ind AS 34 is applicable. What's your view? What's your view? Whether Ind AS 34 is applicable on these results. So guys, don't go by the content. I'm trying to say that every listed company is filing its results on the stock exchanges, right? Its results on the stock exchanges. It is there on their website also. So these are the 4 pages, 5 pages, 8 pages results. Whether Ind AS 34 is applicable on these results? Answer is no. The results have been prepared as per the SEBI LODR requirement, and Ind AS 34 is not applicable to these results. Ind AS 34 is applicable to the interim financial statement, right? And these results have been prepared or extracted from these financial statements. You understand that? So how these results have been prepared? The results are extracted from interim financial statement, from interim financial statements. The results are extracted from interim financial statement, right? So on results, Ind AS 34 is not applicable. Results are prepared as per the SEBI regulations. Okay, but these results are extracted from the interim financial statement, and on those interim financial statement, Ind AS 34 is applicable, right? On those financial statement, Ind AS 34 is applicable, right, friends? Is that clear, friends? On those results, Ind AS 34 is applicable. Tanisha is asking, sir, just to ask, why are these interim financial statement prepared? So, Tanisha, generally listed companies are required to, not generally, listed companies are mandatorily required to file their results to the stock exchanges on a quarterly basis. What is meant by results? Results means they have to file their profit and loss account, they have to file their balance sheet, they have to file their cash flow statement, and they have to file their critical notes to accounts. Now you tell me, if they need to file the results, say to the stock exchange, to the Securities and Exchange Board of India, so how these results are getting filed, how these results are getting prepared? So these results are getting prepared from the financial statement, right? If I'll tell you that, Tanisha, please show me your P&L, show me your profit and loss, how will you show me? First, you need to prepare the financial statement, then you will show me the P&L, right? So for filing these results to the stock exchanges, where on a quarterly basis P&L has to be filed, and on a half-yearly basis P&L, balance sheet, and cash flow, everything needs to be filed, right? And even few important notes to accounts are also there, like segment reporting, right? Like your critical notes, important notes, which is important for the user of the results to understand about that quarter, that interim period. So just to prepare those results, companies are preparing interim financial statement. And you have a very valid question. Going forward, you will be able to understand that since the companies are preparing interim financial statement, a financial statement 4 times in a year, so whether this quarterly financial statement or interim financial statement is also as big as or as huge as annual financial statement, answer is no. Answer is no. These interim financial statement are the small financial statement in comparison to the annual financial statement. Mohammed Abdul is asking, sir, can we see the interim financial statement on a company website? Very good question, Abdul. First of all, there is no mandatory requirement to file or to publish the interim financial statement on the website. There is no mandatory requirement. Okay. Number two, few companies still, like Infosys, like TCS, they are filing their, or they are not filing, they are publishing their interim financial statement in their website as well. But every company is not publishing, like Industar Limited. I have shown you their results. So they are publishing their results on the website. It is a mandatory requirement. But they are not publishing their quarterly financial statement on the website. But Infosys and TCS is publishing their interim financial statement on their website, right? So it depends on the company. If they want to publish, they can publish. Shruti is asking, we can say if results are extracted from standalone financials, SEBI regulation, then Ind AS, we can say if results are extracted from standalone financial SEBI regulation. Shruti, I haven't understood your question, but let me again reiterate. The results which are filed with the stock exchanges, on those results, Ind AS 34 is not applicable. On those results, SEBI regulations are applicable. That is why the format is as per SEBI regulation. The results which I have shown you, the header of the balance sheet was not balance sheet. The header of the balance sheet was statement of assets and liabilities. It is given in the SEBI regulations, right? So on the results, SEBI regulation is applicable, not Ind AS is applicable. Number two, but how these results will be prepared? The results will be extracted from the interim financial statement. So first you need to prepare and finalize interim financial statement. Then you need to prepare the results. So on those interim financial statement, Ind AS 34 will be applicable, right? Gauri Shankar is saying, if is any material discrepancy between interim and actual financial, what is the implication thereafter, sir? First of all, Gauri, let's understand. Interim financial statement is not a provisional financial statement, right? So the word is not right when you are saying interim versus actual. So interim is also an actual financial statement, okay? So interim means it is not for full year, it is for a period less than 1 year, okay? 3 months, 6 months, 9 months. If company is preparing the financial statement for these period, so this is known as interim financial statement, number one. Number two, when you are filing the results to the stock exchange, when you are filing the results to the stock exchange, in that case, of course, these numbers are final numbers. You cannot change the old period numbers subsequently. The change is only allowed when either you are changing the accounting policy or you are correcting an error, which you have understood in Ind AS 1 and Ind AS 8, right? Otherwise, these interim financial statement are also actual financial statement, right? Is that clear? Is that clear? Even the balance sheet and cash flow is also needs to be filed on a half yearly basis as per SEBI regulations. So the number become freezed. The numbers are frozen. Okay. I hope you guys have understood now. Shall I move forward? Okay, so let's move on, friends. And I hope my Excel file is visible. So we understood interim period. And normally, generally, this standard is relevant from the listed company's perspective, generally. Okay. But sir, if unlisted company wants to prepare its quarterly financial statement and wants to publish on their website as well as a part of good corporate governance, yes, this Ind AS 34 will be applicable to those interim financial statement. Whomsoever is preparing interim financial statement, this Ind AS 34 will be applicable, right? Whether Ind AS 34 talks about on which entities Ind AS 34 is applicable, answer is no. Ind AS 34 does not mandate to prepare interim financial statement, right? If a company is required under any law, let's say SEBI LODR. LODR means listing obligation and disclosure requirement. So SEBI regulation says that you need to prepare, you need to file your results on a quarterly basis. You need to file the balance sheet and cash flow on a half yearly basis, including your P&L. So that is why listed companies are preparing interim financial statement. So if a company is required under any law to prepare the interim financial statement, or the company has decided to prepare the interim financial statement, then Ind AS 34 talks about how to prepare and how to present interim financial statement. That's all. Okay. Is that clear? Is that clear, friends? But Ind AS 34 does not mandate. Okay. If a company was formed during the year, say 1st October 2021, the company was incorporated and they are preparing their first financial statement for the period ending March 31st, 2022. Whether this period is called interim period and will Ind AS 34 be applicable? What is your view? The company was incorporated on 1st October. The company was incorporated on 1st October. And of course, the year ending will be 31st March. but it is not for the year financials, it is for the 6 months financial. So friends, whether this period is called an interim period, what's your view? What's your view, friends? Friends just need to ask. One of the student is complaining about that the screen is blur. Are you guys able to see my screen properly? If even one student is able to see the screen properly, it means there is no problem from my side. My internet connection is working fine. Yeah, can you please confirm? So 3-4 students have confirmed that the screen is all right. There is no blurring related problem. So it means even if one student is okay, then there is no any problem from my side. So Rajiv, you can check your internet connection, right? Okay, thanks for confirming. Yeah. So friends, this is not an interim period. Since the company has incorporated in this year only, so they will not write that the financial statement for the half year ending. They will not write like that. They will write financial statement for the year ending, for the year ended, right? So these 6 months financial statement is not an interim financial statement. These 6 month financial statement is also considered as a annual financial statement. And Ind AS 34 will not be applicable on these financial statements, right? This is not considered as an interim period because the company has not chosen the period of less than 1 year, right? Rather, the company has to prepare the first financial statement, which is less than a year due to incorporation during the year. Hence, these financial statement will not be treated as interim financial statement. Hence, these financial statement will not be treated as interim financial statement, right? Is that clear? Next question. So the first belongs to the incorporation. Now the next belongs to the liquidation. A company was liquidated on 30th September 2021. They have prepared their last financial statement for 6 months ending September 30th, 2021. Whether it is called an interim period and will Ind AS 34 be applicable? So they have prepared their last financial statement from 1st September to 30th September for 6 months. So whether this period is called as an interim period? Answer is again no. This is not considered as an interim period and Ind AS 34 will not be applicable. Why? Because the company has not chosen the period of less than 1 year. Rather, the company has to prepare the last financial statement, which is for 6 months, right? The company has not decided or chosen. It is mandate, okay? And hence it is not considered as an interim period financial statement. Are you getting me? Are you getting me, friends? I hope you guys have understood with all the examples. I hope you guys have understood with all the example. Mansa is asking, sir, let's say unlisted company prepare interim financial statement voluntarily for particular year. Are these required to prepare for next year also? No, Mansa. It is not mandate. No. Okay. Very good question, Mansa. Very good question. So if the company is preparing interim financial statement on a voluntary basis, it is not required to prepare to the financial statement, interim financial statement in the next year as well. It is not mandatory. Okay. Financial reporting, I have told you financial reporting means structured presentation of financial statement. Sir, can you show me the results which you are showing on the website? Okay. Okay. Let me show you again. Let me show you again. Please confirm if you are able to see those results. Please confirm. I think you are able to see these results now. This I have downloaded from the website. Indus Towers Limited. This is results for the quarter and half year ended. You can see that they have used the word statement of audited standalone Ind AS financial results. for the quarter and half year ended 30th September 2022. Right? Notes to financial results, statement of assets and liabilities, statement of cash flows, right? And some notes are there, which is as per SEBI LODR, SEBI regulations requirement. So I just wanted to show you that these are the important notes. Okay, friends. Okay, let's move on to the next part. What is the objective of Ind AS 34? The objective of Ind AS 34 is this standard prescribes the minimum content of interim financial reporting. The minimum content of interim financial statement, I would say. The principle for recognition and measurement in interim financial statement. This standard also provides some recognition and measurement criteria. Like Ind AS 1 was not providing any measurement and recognition relating criteria. But this standard provides some, recognition and measurement related criteria also. We will discuss this later on. Scope, I have already discussed. This standard is not mandate that which entity should prepare interim financial statement. This standard says that if the entity is required by any law like SEBI regulations or the entity voluntarily decided to prepare interim financial statement, then I will be applicable. But it does not say that to whom I will be applicable. So it does not say that these entities should prepare the interim financial statement. It does not talks about that. If you have decided to prepare interim, then I am applicable. Okay, this standard says that interim period is a period for less than 1 year, like quarterly, half yearly, 9 months ended. And interim financial report is a report. It's a financial statement for a period of less than 1 year, which includes either a complete set of financial statement or a condensed set of financial statement. Now the question comes, sir, annual financial statement, we all understood that every company is required to prepare the financial statement for a period of 12 months, right? At least a company is required to prepare and file the financial statement in ROC for a period of 1 year, right? It is a mandatory requirement. It is given in Companies Act in DAS 1 also. Sir, but if the company will prepare the financial statement for 4 times, should the company prepare the same huge and bulky financial statement for the 4 times? So the standard has given you 2 choices. Choice number 1, if the company wants to prepare the quarterly financial statement as detailed as the annual financial statement, the company can prepare that. It is known as a complete set of financial statement. So interim financial statement can either considered as a complete set of financial statement, that is number 1, means like you are preparing the yearly financial statement where you are publishing all the disclosure, the detailed accounting policies, accounting estimates, the breakup of assets and liabilities, income and expense, breakup of balance sheet, P&L in the notes to accounts, right? Actuarial related disclosure, contingent liability disclosure, related party disclosure, capital commitment disclosure, all those disclosures. If you want to prepare every time the complete set of financial statement, you can prepare. But generally, the companies are not preparing the full set of financial statement on a quarterly basis, generally. But if the company wants to prepare, they can prepare, right? Sir, why the company should prepare the full set of financial statement for even on a quarterly basis? Friends, at times, when it is a large group, at times, right? So normally they want to see all the schedules, all the notes, all the disclosures on a quarterly basis. So they promote their companies to prepare the full set on a quarterly basis. But generally companies don't prepare that. Why? Because in Ind AS 34 there is another option. If you don't want to prepare a complete set of financial statement, you can prepare a condensed set of financial statement, a condensed set, right? A condensed set of financial statement. And in this condensed set of financial statement, it is a smaller version of the full set of financial statement. It is a smaller version of the full set of financial statement where the balance sheet will be there, the complete balance sheet, complete profit and loss will be there, complete cash flow will be there, right? Complete statement of changes in equity will be there, but complete notes to accounts will not be there. Critical notes to accounts will be there. Is that clear? So 4 statement will be the complete statement, but in notes to accounts, some critical notes to accounts will be there. Okay, friends. So friends, the companies have 2 choices. If the company wants to prepare a full set of financial statement on an interim period also, they can prepare, they can do that, right? But if the company wants to prepare a smaller set of financial statement on a quarterly basis, because there is no use of preparing a full set of financial statement on a quarterly basis, the standard permits that option. Okay, friends, if a company has decided to present or prepare a complete set of financial statement like for annual period, then Ind AS 1 will be applicable. Okay, and balance sheet, P&L, cash flow, statement of changes in equity, notes to accounts, these all needs to be prepared as per Ind AS 1. Like you are preparing for a full year, the financial statement for a quarter needs to be prepared accordingly, right? In that case, Ind AS 34 will not be applicable. Why? Because you are preparing everything, right? You are preparing everything. So Ind AS 1 guidance needs to be followed. Okay. So standard says that if you are preparing a complete set of financial statement, then you need to follow Ind AS 1. But if you want to prepare a condensed set of financial statement, in that case, you need to follow Ind AS 34. You need to follow Ind AS 34. And Ind AS 34 says that you need to prepare condensed balance sheet, condensed statement of P&L, condensed statement of cash flows, condensed statement of changes in equity, and significant or limited notes to accounts. Sir, what is meant by condensed? What is the Hindi meaning of condensed? Condensed means chota, smaller, right? So a smaller version of financial statement needs to be prepared on a quarterly basis. This standard permits that. Okay. Now, what is meant by this condensed financial statement? Let me show you. Friends, please let me know if you have any questions so far, so that I'll move forward accordingly. If you have any questions so far. Gauri Sankar is asking, is auditor can give qualified report and unqualified for other quarter? Yes, Gauri, you are right. And I'm very happy to see the questions which the students are asking, right? And the questions are more practical in nature rather than theoretical. Hats off to you guys. So to answer your question, and I'll elaborate this question to the benefit of everyone. So what Gauri is asking, he is asking, let's say a company has prepared there is a listed company, and the company has prepared interim financial statement for the June quarter. And June quarter was a perfect quarter. There was no any ambiguity, no any anomalies, nothing was there. And the auditor has given an unqualified audit report, means a perfect audit report. In September quarter, there was an impact on a going concern, right? There was an impact on a going concern. And in that case, the auditor has issued a qualified report for the half year and quarter ending September period, right? So it can be possible that in one quarter, the auditor will qualify the audit report. In the another quarter, auditor will not qualify the audit report. There could be a possibility. Okay, sir, but what happens at the year end? At the year end, the auditor needs to assess, right, whether that qualification still exists in the year ended report, right? Or it is impacting for the year ended or as on date financial statement. If answer is yes, then auditor will qualify the annual audited financial statement as well, the report on the annual financial statement as well. Okay. Vanshika is asking, sir, what is condensed? So let me speak about that, Vanshika. I have not covered that. Okay. Condensed Hindi meaning means a smaller version. Now, what is meant by condensed? Standard says that for preparing the condensed set of financial statement, for preparing the condensed set of financial statement, the component of financial statement means balance sheet, P&L, cash flow, statement of changes in equity, right? So these component of the financial statement requires the presentation of major heading. For preparing the condensed set of financial statement, the component of financial statement requires the presentation of major heading and subheadings of the last annual financial statement. Major headings and subheadings of the last annual financial statement. Friends, what does it mean? Last annual audited financial statement, last annual financial statement. Last annual means, for example, the company is preparing the condensed interim financial statement for the June quarter. Okay. What is the last annual in comparison to June quarter? For example, it is June 2023. What is the last annual? Last annual is March 2023 is the last annual, right? March 2023 is the last annual financial statement. So whatever March and last annual financial statement is there, March balance sheet is there. For example, how to prepare the condensed balance sheet? So you will see what is my March annual balance sheet. From the March annual balance sheet, you can pick major heading. What is the major heading? Like non-current asset, current asset is major heading. And subheadings. What is the subheadings? Like PP, intangible assets, CWIP. So you can present your balance sheet, you can present your condensed balance sheet with your major heading and subheading, which was presented in the last annual financial statement. So how to present condensed balance sheet? The condensed balance sheet is typically the same balance sheet which you have prepared in the March annual financial statement. Sir, then why we are calling it as a condensed balance sheet? Friends, you know, when you prepare the annual balance sheet, there is a notes also, and for every line item you are just giving a note number, and in the notes to accounts, in the schedules, there is a detailed breakup, there is a detail about those line item on the face of the balance sheet. Yeah, yes. So friends, these detailed line items, these detailed breakup is not required in the interim condensed financial statement to be presented. Are you getting me? So the condensed balance sheet is as good as the full balance sheet. The condensed balance sheet is as good as the full balance sheet. But the only difference is the detailed breakup of every line item on the face of the balance sheet is not required in the notes to accounts, right? So that is why on the face of balance sheet, you will not find the note referencing or for every line item. Is that clear? Is that clear, friends? You will not find the note referencing for every line items. I hope it is clear to everyone. Ansika, have you understood this? Meaning of condensed? Yeah. What about condensed P&L? Condensed statement of profit and loss also includes the major heading and subheadings of your last annual P&L. So it means your condensed P&L is as good as your detailed P&L. The only difference is in your condensed statement of profit and loss, the detailed breakup of every line item will not come. Right? Coming to the cash flow, again, the major heading and subheading which you have used in your annual cash flow, you can just present the cash flow as a condensed cash flow in your interim financial statement. Friends, again, typically condensed balance sheet, condensed statement of profit and loss, condensed cash flow, condensed statement of changes in equity is same what you are presenting in your annual. The only difference is all the notes to accounts are not required, right? All the notes to accounts are not required in the condensed financial statement. So friends, let me show you the condensed financial statement. Okay. Let me show you the condensed financial statement of Infosys. Please let me know if the Infosys financial condensed financial statement is visible. Please let me know if it is visible, guys. Is it visible? Okay. Friends, you can see that this is a condensed standalone financial statement for 3 months and 6 months ended September, because it is September. That is why you need to prepare the for the quarter and for the period ended, which is 6 months. You can see that there is a condensed balance sheet. They have given the condensed balance sheet, P&L, condensed statement of changes in equity, condensed statement of cash flow. So Infosys is a company which used to publish their condensed interim financial statement as well on their website. So I have just taken out from their website. Friends, you can see that this company has given the condensed balance sheet, right? Balance sheet for September, March. Sir, but you were saying the note referencing is not there in your condensed balance sheet. Friends, limited notes are required, right? When I'll cover the notes to accounts, you will realize that limited notes are required. So what Infosys has done, they have not given the detailed note. They have not given the note with respect to every line item. You can see that there is no any note in the capital work in progress, right? No any note. In annual financial statement, they are giving the note for CWIP also. Why? Because there is an aging of CWIP is required as per Schedule 3. So they are not giving all those Schedule 3 related disclosure in the interim financial statement. They are not giving. And you can see that this September financial statement, this condensed financial statement is only 30 pages financial statement. But if you will look at the Infosys financial statement, it is close to 60, 70 pages financial statement for annual financial statement. You can see they have not given any breakup of deferred tax asset or income tax assets, right? But if you see their annual financial statement, again, they are giving breakups, they are giving disclosures, they are giving detail about deferred tax and income taxes as well, which is close to 2 to 3 pages, right? So for every line item, they have not given this disclosure. They have given few disclosure, which they found critical, and that is why they have given the note number. But like annual financial statement, the disclosures are not there for every line item. Okay, you can see the disclosure is not there for every line item. Okay, for limited line item, they have given the disclosure. Is that clear? But other companies, which I know, they are not giving this notes to accounts. They are not giving the note referencing, or they are not giving all the notes of in the interim financial statement, right? Infosys has given few notes in the interim financial statement. But again, even in the notes to accounts, they have only given the breakup. They have not given the detailed disclosure, right? They have not given the detailed disclosure. Is that clear, friends? So this is a condensed balance sheet. This is the condensed statement of profit and loss. And you can see that they have not given the disclosure of finance cost. जबकि finance cost का disclosure mandatory है, breakup mandatory है. So they are giving the finance cost breakup, they are giving the depreciation breakup in their annual financial statement, but they have not given the breakup of depreciation of finance cost in the interim condensed financial statement. However, these all breakups are required to be shown in the annual financial statement, right? But they have not given the breakup in the interim financial statement. Do you understand that? So they have cherry picking. They done the cherry picking and they have given few disclosures. Then there is a condensed statement of changes in equity is there. Then there is a condensed statement of cash flow is there, right? Condensed statement of cash flow. This is their condensed statement of cash flow. It is a full cash flow. Okay. It is a full cash. This is what they have done, right? Is that clear, friend? I hope you guys have understood. So the balance sheet, P&L, cash flow, statement of changes in equity is same, as good as annual, but the only difference is all the notes is not required to be given for the every line item of the balance sheet and P&L. Right, friends? Shall I move forward? Sir, condensed and abridged financial statement are same. What do you think? Condensed and abridged financial statement are the same financial statement. What do you think, guys? Can I expect the answer from the others? Whether condensed and abridged financial statement are same? Yeah. Friends, I'll not say that it is same. Condensed financial statement has some completeness. Okay. Abridged financial statement, for example, the company will only take balance sheet, P&L, cash flow, and statement of changes in equity, and the company will not give any notes to accounts. In this condensed financial statement, the company is required to give some notes to accounts, which I am going to cover in the next part. Okay. So I will not say that the condensed and abridged financial statement are same. Right. Condensed financial statement are the complete financial statement where the limited disclosures are required, right? Where the limited disclosures are required. Okay. Gauri is asking, sir, if companies is going for IPO, then we have to prepare the interim financials, sir. No, not required, right? If the company is going for IPO, so the company has to prepare their full set of financial statement. They have to restate their financial statement on the basis of Ind AS for their prospectus. But if the company is going for IPO, then the interim financial statement on every quarter is not required until and unless the company got listed. Sir, in case the going concern seems doubtful for the company, then will the condensed note still be applicable? Or is it mandatory to go for detailed notes and disclosure? So there is no concept of condensed note. See, if there is a impact on the going concern, right? In that case, I'm not saying the company is liquidated. There is impact on the going concern. Then the going concern disclosure, the disclosure relating to the going concern will be the detailed disclosure, right? You will not say that since there is an impact on the going concern and the company has a material uncertainty relating to going concern, and that's all. You have to, whatever note you are giving, you have to give in detail so that the completeness will be there. Okay. Vanshika has very beautifully summarized it. She told that, sir, abridged financial statement are the summary version, but condensed financial statement are we are making limited disclosure in the financial statement. You are right, Vanshika. So guys, hold on for some time, right? You will be able to understand that how this interim condensed financial statement are prepared, and this interim condensed financial statement will also require some notes to accounts, some limited notes to accounts, right? Which we are going to discuss later on. Whether comparative period is required in case of condensed financial statement, answer is yes. Yes. In condensed or interim financial statement, comparative period is also mandatory. Now, friends, the most important part. If you are preparing an interim condensed financial statement, then what are the period for which interim financial statement is required to be presented? What are the period for which interim financial statement is required to be presented? What are the period? Guys, please tell me what are the period for which interim financial statement is required to be presented. So let me ask this question to you. Let's say X Limited is preparing, X Limited is preparing interim condensed financial statement for the quarter ended 30th June 2023. which period is required to be presented in such interim financial statement. Of course, 1 year comparative is required to be presented. You all agree? Balance sheet. Balance sheet. So current period, comparative period. So one thing is very clear. Balance sheet, of course, balance sheet as it June 30, 2023, right? Balance sheet as at June 30, 2023. What about comparative period? This June 30, 2023 balance sheet needs to be compared with which period? Tell me, friends. With which period? Balance sheet. The balance sheet comparison, it is a financial position. So the balance sheet comparison should always happen with the last March, last annual financial statement, last annual balance sheet. So last annual balance sheet means as at March 31st, 2023. It is not a performance, it is position, right? आप तो कंपेयर करोगे ना कि मेरे डेटर मार्च में कितने थे और अब कितने हैं, right? What was my borrowing in March and what is my borrowing today? It is a like to like number. It is a balance sheet number, right? So balance sheet needs to be compared. In the interim financial statement, the current period balance sheet needs to be compared with the last annual year end balance sheet. Last annual year end balance sheet, right? Gauri, it is not 30th June 22. The balance sheet is always last annual year end balance sheet. What about profit and loss? What about profit and loss? Profit and loss is for the quarter ended June 30, 2023. This is not your for the quarter ended. Just a minute. For the quarter ended June 30, 2023. This is not your financial position. This is your financial performance. So can I compare my 3-month performance with the 12-month performance? Answer is no. So profit and loss, since it is a performance, it is for the quarter. So it has to be compared with for the quarter ended last year, June 30, 2022. June 30, 2022. Last year quarter. Is that clear? What about cash flow statement? What about cash flow statement? Again, cash flow statement is also performance. Again, it is of course for the quarter you need to prepare, and it has to be compared with the same period of last year for the quarter. What about statement of changes in equity? What about statement of changes in equity? It is again for the quarter. Statement of changes in equity is again for the quarter, right? It is again a performance. So if I talk about balance sheet shows the position, but all other components shows the performance. All other shows the performance, right? Tanisha, I am only talking about balance sheet. I am only talking about balance sheet, Tanisha. Right? I'm not talking about the entire financial statement needs to be compared with the financial statement. I am talking about if you are preparing a June financial statement, means in the financial statement, what you will prepare? In the financial statement, you will prepare balance sheet, P&L, cash flow, and notes to accounts, statement changes in equity and notes to accounts. So the balance sheet comparative is March. P&L comparative is P&L cash flow, and SOC comparative is the comparatively quarter, right? Is that clear? Is that clear, guys? Tanisha, are you clear? Okay. I hope it is clear to all of you, friends. I hope it is clear. So, friends, what about the September quarter? What about September? So, this is what I have prepared. This is what I have given. What about September? Friends, what about September? For September, the balance sheet. Tell me what about September? Same question I'm asking. X Limited is preparing. X Limited is preparing interim financial condensed financial statement for the period ended 30th September 2023. Which period is required to be presented in such interim financial statement? Tell me. I need the answer quickly, friends. I need the answer quickly. I'm asking which period should be covered in these interim financial statement. I have covered June. I'm covering September. Right? Yes. So balance sheet will be all. Of course, the balance sheet should be as at September 30, 2023, and this needs to be compared with the 31st March 2023. The balance sheet needs to be compared with the 31st March 2023. It shows the position, right? Profit and loss. Profit and loss. Friends, the company is preparing YTD, year to date, means 1st April to 30th September financials, right? If the balance sheet is at 30th September, so it needs to be compared with 31st March. So the first quarter, if I talk about the first quarter, June, for the quarter means for the period and year to date is same. In the June, if someone will say that what is the period of year to date, it is 3 months only. And what is the period for the quarter? It is 3 months only. But for September, year to date is 6 months. And for the quarter is 3 months, right? So friends, for the performances means your profit and loss and for your profit and loss, specifically for your profit and loss, standard says that you need to prepare your profit and loss for the quarter and year to date. Profit and loss should be profit and loss should be presented for the quarter and year to date, right? Shall be presented for the quarter and year to date. What is meant by year to date? Let me talk about. For the quarter ended. For the quarter ended what? For the quarter ended what? September 30, 2023. Friends, what is the quarter ended September 30, 2023? What is the quarter ended 30th September 2023? Tell me. It means 1st July to 30th September. 1st July to 30th. It means 1st July to 30th September. For the quarter ended मीन्स क्वार्टर सितंबर का कब एंड हो रहा है, तो 3 मंथ सितंबर के अगर 3 मंथ्स एंड हो रहे हैं सितंबर में, तो स्टार्ट कब हुआ होगा? 1 जुलाई को. जुलाई, अगस्त, सितंबर. फॉर द क्वार्टर एंडेड सितंबर 30, 2023 एंड फॉर द year to date, for the year to date means for the year to date means means for the year to date, September 30, 2023. Year to date means 1st April to 1st April to 30th September means 6 months. So here it comes as a 3 months and here it comes as a 6 months. Okay. So P&L, profit and loss, you need to give for the relevant quarter. For the last quarter you have given, for the June quarter you have given, you have to give from July to September quarter, right? July to September quarter. And for the half year, you are also required to give for the half year. So full P&L is required to be given for the half year as well as for the quarter. Parallelly, same comparative. For the quarter ended September 30, 2022 and for the year to date, September 30, 2022. Right? Is that clear? But for cash flow and SOCI, it is always year to date. Simple, 6 months. Right? Simple, 6 months. Year to date needs to be given. Right? Any doubt, friends? Any doubt so far? Let me show you the Infosys interim financial as well so that you will be able to understand this. So two P&L are to be prepared, sir. Let me show you, Tanisha, how it is going to be presented. Okay. So I am showing you the interim condensed financial statement of Infosys for the half year ending, for the year to date, for the half year ending September 30, 2022. Okay. I hope it is visible. Can you see the interim condensed balance sheet? It is as on 30th September 22 and the comparative is 31st March 2022. This interim condensed balance sheet is for the half year ended. So this interim condensed financial statement is as on date and for the half year ended September 22. Okay. So September 22 comparison is March 22 in the balance sheet. Okay. Now let's come to the P&L. Can you tell me quickly, the P&L should have been prepared for which period? Of course, for the current quarter and the current half year versus the same period of the last year. Right? 3 months. 3 months ended. 3 months ended. So 3 months ended September 30, 2022, current period. 3 months ended. Right? When I'm saying 3 months ended on September, it means from when it was started on 1st July. So 1st July 22 to 30th September 22, 3 months. Comparison 1st July 21 to 30th September 21. Then 6 months means year to date. Right? Then this is your 1st April to 30th September 22, 1st April to 30th September 21. So 4 columns should be there in the interim condensed P&L. Right? I hope, Tanisha, now it is clear to you. It is quarter and half year. Very good. Is that clear, Tanisha? Okay. Now let's go to the statement of changes in equity. Statement of changes in equity, I told you it is always for the year to date, means for the half year in this case. You can see changes in equity for 6 months ended September 30, 2021, right? So they have given for 6 months, 1st April 21 to 30th September 21. Okay. And the same is for the current period, 1st April 22, 1st April 22 to 30th September 22. This is your 6 month statement of changes in equity. Then go to the cash flow. Your statement of cash flow, your consolidated, so your condensed statement of cash flow, consists of 6 months ended means half year. September 22, September 21, right? So this is for 6 months. I hope you guys are now able to understand, now able to correlate with the help of this practical example, right? So I have given you two examples of the first quarter and the half year as well. What about for the 9 months? What about for the 9 months? So here I have given the 3 months, 6 months, 9 months. For 9 months, the balance sheet needs to be prepared as on 31st December versus as on March. The P&L should be for 9 months, year to date, 1st April to 31st December. Comparative is again for the same period. And for the quarter ended December is also required to be prepared, means from 1st October to 31st December. But for statement of changes in equity and cash flow, it is always for the year to date, which is 9 months in this case. I hope this is clear to all of you guys. I hope this is clear to all of you. Is that clear to all of you, friends? Gauri is asking, sir, if we prepare directly 6 months period interim report, then comparison period will be. So Gauri, first of all, you cannot do that. In your half yearly interim report, the balance sheet is always 2 column, as on date balance sheet versus 31st March balance sheet. P&L will be 4 column, right? So what you will do, you can prepare 6 months, P&L, and from the 6 months, if you will reduce your first quarter number, it will give you the current quarter number, right? But for the profit and loss, you have to give year to date. Why I am not only saying half year, why I am saying year to date? So that when you will prepare December, for December, year to date is not half year. For December, year to date is 9 months, right? So 4 column for the quarter ended and for the year to date. In September, year to date is half year. In December, year to date is 9 months, right? Sir, please show once the 9 months chart. Okay, let me show you. So instead of showing the 9 months chart, so let's prepare quickly. The 9 months also cover here. Okay. X Limited is preparing interim condensed financial statement. X Limited is preparing interim condensed financial statement for the period ended 31st December 2023. Which period is required to be presented in such interim financial statement? Quickly, you guys need to tell me. Quickly. I'll not spend much of time here, right? Balance sheet as at December 31st, 2023. The comparison will be with the March. Profit and loss for the quarter ended December 31st, 2023. December 31st, 2023. For the quarter ended December means 1st October to 31st December. 1st October to 31st December. Right? For the quarter ended, same comparison period. Comparative period is also same. So let me put this here also. So comparative is the last year quarter of the same last year of the same quarter of last year. Year to date means 9 months. Here year to date is 9 months, right? So again it is your December 31st, 2023. But here 9 months means 1st April to 31st, right? Here December 31st, 2022. Again 1st April to 31st December. Then cash flow. Your cash flow and everything is your 9 months ended. Your cash flow, your statement of changes in equity is 9 months ended here. Friends, instead of showing, I have also solved. I have shown you that how it is going to be done, right? The P&L, the balance sheet is as on date. P&L is for 3 months and 9 months here. and your statement of cash flow and statement of changes in equity is 9 months. Right? Mansa is asking, sir, in 9 months ended financial statement, we prepare profit and loss account for full year itself. Mansa, I haven't understood you. How can 9 months be the full year? I haven't understood you. It is 1st April to 31st December, Mansa. How is it full year? April to December is 9 months only, na? April to March is full year. So the balance sheet comparison is only with the March of last year. Guys, do you have any question? Shall I move forward? Do you have any question? Should I move forward? Friends, we discussed condensed balance sheet. Condensed, we discussed condensed balance sheet. We discussed condensed statement of profit and loss. We discussed condensed statement of cash flow. We discussed condensed statement of changes in equity. Sir, what about notes to accounts? As you said that all the breakup of balance sheet and P&L item is not required. What are the limited item? What are the limited notes which is required in the condensed financial statement, in the interim condensed financial statement? So friends, let's talk about significant or limited notes to accounts. Let's talk about that. Friends, there are two kind of notes, right? There are two kind of notes. I'll divide these notes into the two category. Number one, mandatory notes. Number two, notes which has to be presented if it is material. So friends, following disclosures are required to be made if material. So there are two kind of notes. Please write down. There are two kind of notes. So let me write it. Notes to accounts. There are two kind of notes required to be presented as per Ind AS 34. Number one, notes which will be disclosed only if it is significant oblique material. Number two, mandatory notes, right? Irrespective of materiality. Just to give you a view. So we are discussing number one, right? We are discussing number one. Significant events and transaction, right? So notes relating to significant events and transaction are required to be disclosed in interim financial statement. Friends, acquisition and disposal of PPE, property, plant and equipment. So if the company has purchased or the company has sold the property, plant and equipment during the interim period, it is required to be disclosed only if the amount is significant or material. So friends, like telecom infra company, like Indus Towers Limited, they used to present their PPE, they used to present their property, plant and equipment disclosure in their interim notes to accounts, in their interim financial statement. Why? Because their PPE is material, right? So this is the example that if the amount is material, it is required to be disclosed in the notes to accounts. So they are giving their entire PPE schedule consisting of their gross block, accumulated depreciation, net block, like Infosys is also giving that, right? So friends, PPE and intangible asset are required to be disclosed in the notes to accounts, the detail of these items in the notes to accounts if these are material. If these are material, right? Is that clear? Is that clear, friends? So if the amount is not material, then whether it is required, answer is no. Answer is no, it is not required. So this is an example of notes which will be disclosed only if it is significant or material, right? If it is significant or material. Number two, other notes or mandatory notes. Number two, exceptional item. So not exceptional item. Segment information. Segment information. Like segment information is always required. Doesn't matter if it is material or immaterial. Doesn't matter. Segment information, dividend paid or declared, it is always required. This is a mandatory notes. This other disclosure means mandatory disclosure, right? Irrespective of the materiality. You understand there are two kind of notes. Number one, notes which will be disclosed only if it is significant or material. And the standard has given the list of these kind of notes. It is not an exhaustive list. It is an indicative list. Okay. But the standard has given these kind of list. Right, friends? So there are two kind of notes. Number one, significant event and transaction. These notes relating to any significant event and transaction are required to be disclosed in interim financial statement. Means following disclosure are required to be made if material, if significant. Example, write down inventory to net realizable value or reversal of impairment of inventory. So this is as per Ind AS 2. This inventory is a Ind AS 2 standard, right? Ind AS 2 standard. So as per Ind AS 2, if you are write down your inventory to NRV, you remember, as per Ind AS 2, it says that inventory has to be measured at cost or NRV, whichever is lower. Same thing was there in accounting standard also, right? So if the company has impaired the inventory or the company has reversed the impairment on inventory, and if it is material, it is required to be disclosed in the interim financial statement. Impairment of financial asset as well as non-financial asset. You will read the impairment of financial asset in Ind AS 109 and you will read the impairment of non-financial asset in Ind AS 36. So if the company has impaired its financial asset or non-financial asset, or there is a reversal of impairment of financial or non-financial asset, it is required to be disclosed if it is material. Reversal of any provision for restructuring. This provision for restructuring concept you will read in Ind AS 37. Why I am writing the name, the number and name of these Ind AS, the number of these Ind AS, so that probably you are thinking that, sir, we don't know what is provision for restructuring. Sir, we don't know how to compute the impairment of financial asset. So you will read all these concepts in your respective Ind AS. This Ind AS is a interim financial reporting based Ind AS, which includes all the line item, right? I cannot explain each and every line item as per those standards. You will read these concepts in those standards, right? Like when we discussed Ind AS 1 presentation of financial statement, we discussed entire balance sheet. So in balance sheet, there are, let's say, 25 line item. Those 25 line item are 25 Ind AS. Okay. So I'm just writing the number of Ind AS for your reference. Acquisition and disposal of PPE. If the company has acquired and purchased or disposed of PPE, then it is required to be disclosed if it is material. Ind AS 16, you will read this PPE. Capital commitment. Capital commitment. So guys, capital commitment. Again, this capital commitment is also required to be disclosed, right? If it is material. For example, the company has entered into a commitment. The company has issued a purchase order to its capital creditors for 1000 crore. So that 1000 crore will become part of the capital commitment. Litigation settlements. Again, as per Ind AS 37, if the company has done any litigation settlement, there was a court case going on and the company has settled that court case. So it is required to be disclosed if the amount is material. Contingent liability or contingent asset, again, it is required to be disclosed if the amount is material. Correction of prior period error, Ind AS 1 oblique Ind AS 8, right? It is again required to be disclosed if it is material. The detailed disclosures will be required in notes to account. Changes in business or economic environment which has an impact on the fair value of the financial asset or liability. It is also required. So it talks about the fair value of financial asset or liability as per Ind AS 109. As per Ind AS 109. Okay. So friends, if there is a changes in the business or economic environment which has a huge impact on your financial asset or liability, it is required to be disclosed in the notes to accounts. Any default in the loan covenants, you remember, if there is a default in the loan terms and condition, it is required to be disclosed. Related party disclosure, if it is material, it is required to be disclosed. Otherwise, it is not critical to disclose. Changes in the classification of financial assets and liabilities, Ind AS 109, right? Again, this is required to be disclosed if it is material. Transfer between the input hierarchy in the financial asset or liability, Ind AS 113, fair value measurement. So these notes, these items, you will be able to understand all these items when you read the respective Ind AS. But the point is, in the interim financial statement, these disclosures are required in the notes to accounts if the quantum, if the amount is material. Is that clear? This is the indicative list. This is not the exhaustive list. So anything which is material is required to be disclosed, I would say, or I would put it in this way, right? Thank you, Tanisha, for your wonderful feedback. Love that. Thank you so much, Tanisha. And you know, the time has changed. So now CA final is not only theory. Now CA final requires a practical level of, knowledge as well. So that is why I'm happy to relate this theory with the practical so that it will get registered in the mind of you guys. Okay. Is that clear, guys? You understand the significant events in transaction, material events in transaction, right? So friends, it's 8:30 now. Let's have a break for 7 minutes. Okay, it's 8:28 now rather. So let's have a break for 7 minutes and we will start at 8:35. Okay. Friends, now coming to the other disclosure. Other disclosure is mandatory disclosure, right? Doesn't matter it is material, immaterial, doesn't matter. It has to be disclosed. In other disclosures, the first disclosure, sir, as you told that this condensed financial statement is a shorter version of the full set of financial statement. And if I'll ask you that accounting policies, this accounting, if you see any financial statement, 9 to 10 pages consist of the accounting policy of those financial statement, right? So Ind AS 34 says that the accounting policy is not required to be repeated in every interim condensed financial statement. It is not required to be repeated, right? But you have to write a statement. What kind of statement you have to give in your notes to accounts? What kind of statement you need to disclose? A statement that the same accounting policy or method of computation is followed in the interim financial statement as in the last annual financial statement. You are not required to reproduce or repeat the 10-pager accounting policy in your notes to accounts as well, in your interim financial statement as well, right? But you need to write a fact that the same accounting policy or method of computation is followed in the interim financial statement as we have followed in the last annual financial statement. So you can refer the accounting policy of last annual financial statement, whatever accounting policy is there. We have prepared our interim financial statement as per these accounting policies only. If different accounting policy and method has been followed in comparison with last annual financial statement, then nature and impact needs to be disclosed. Friends, the standard on leases, you will read that Ind AS 116. Ind AS 116 is a standard on leases, right? So if I talk about the lease standard up to 31st March 2019, the applicable standard on leases was Ind AS 17. Ind AS 17 was the applicable standard on leases. This standard was withdrawn and effective from 1st April 2019, effective from 1st April 2019, this Ind AS 17 was withdrawn, Ind AS 17 was withdrawn, and Ind AS 116 was made applicable. Ind AS 116 was made applicable. And let me tell you, you will read Ind AS 116 in 3 or 4 sessions. And let me tell you, this Ind AS 116 is a complete change in terms of accounting of leases. This is a completely changed standard, right? So of course, when the company has prepared the first interim financial statement of June 2019, so of course they have changed the accounting policy of leases. They have changed the accounting treatment of leases. They have changed the computation of leases, right, in terms of accounting. So in that case, the company has given the new accounting policy with respect to leases. The company has disclosed that due to the introduction of Ind AS 116 and withdrawal of Ind AS 17, right, we have followed a new accounting policy as per Ind AS 116, which is reproduced below. So they have given the new accounting policy on Ind AS 116. Okay, is that clear? So if there is no change, there is no new standard, there is no amendment in standard, there is no new change, in that case you have to write just a statement that the same accounting policy or method of computation is followed, right? Explain the seasonality or cyclical nature of operation in the interim financial statement. Friends, like sugar industry is a cyclical industry, it's a seasonal industry, right? So if the business of the company is seasonal or cyclical, this fact is required to be disclosed in the notes to accounts, right? This fact is required to be disclosed in the notes to accounts. So explain the seasonality or cyclical nature of operations in the interim financial statement. This is again a mandatory disclosure. You can see that these kind of disclosure is more of a policy related disclosure. Exceptional item. If there is any exceptional item, generally exceptional item are those items which are significant and material in nature as well, right? So if there is any exceptional item, for example, Delta Corp. Have you heard about Delta Corp? It's a gaming and casino company. So just in 4 or 5 days back, the GST authority has imposed a GST liability of close to 17,000 crore on Delta Corp. It is 3 times or 4 times more than their net worth or their market capitalization, I would say. Right. So this is kind of an exceptional item. So these kind of things is required to be disclosed. Nature and change in estimate from last interim period or last annual period. If the company is preparing a June financials and from the March, the company was in the March, the company has taken a useful life of machinery for 10 years. Now the company has decided to reduce this life from 10 years to 8 years. This is a change in estimate. So if there is a change in estimate, it is required to be disclosed, the nature and change in estimate. Or even from last quarter to this quarter, if the company has changed the estimate, it is also required to be disclosed. Issue, purchase or repayment of equity and debt securities, right? Means this disclosure is related to a capital structure. If the company has issued any equity shares, if the company has done any right issue, the company has done any buyback, the company has raised any commercial paper, non-convertible debenture. So if the company has done anything relating to the capital structure, means equity and borrowings, in that case, it is required to be disclosed. Dividend paid or declared. If the company has paid the dividend or the company has declared the dividend, it is required to be disclosed in the notes to accounts. Segment information as per Ind AS 108. Segment reporting is required to be done in the notes to accounts. Whether you guys have completed Ind AS 10, whether you guys have read Ind AS 10. Yes, Mansa, on these disclosure, Ind AS 8 will be applicable. Whether you guys have covered Ind AS 10, events occurring after balance sheet date, events occurring after reporting date. Okay. So even for quarterly financial statement, this quarterly Ind AS financial statement for, let's say, June quarter, let's say September quarter or September period, December period, these are also required to be approved or authorized in the board meeting, right? So if there is any events which occur between the reporting date to the date of approval of the financial statement, these are also needs to be disclosed in the notes to accounts. These are also required disclosure in the interim financial statement. Business combination, loss of control in subsidiary and discontinued operation. If the company has acquired any business, okay, during the interim period, or the company has lost control in the subsidiary, the company has done the stake sale in the subsidiary, or the company has discontinued any operation, then the detail is required to be disclosed in the notes to accounts. Fair value disclosure of financial instruments is required to be disclosed in the notes to accounts. You will read this concept in Ind AS 109. If an entity become an investment entity or it ceases to be investment entity, it is required to be disclosed in the notes to accounts. Disaggregation of revenue from contract with customer. What does it mean? For example, the company has a revenue from supply of goods. The company revenue from sale of goods. The company has a revenue from supply of services. So these kind of disaggregation, that this revenue is from sale of goods, this revenue is from supply of services, this kind of disaggregation of revenue is also required to be disclosed. Disclosure of compliance with Ind AS in IFR. Disclosure of compliance with Ind AS in interim financial report, right? So friends, as I have told you, in Ind AS 1, you remember I have told you the company is required to provide an explicit and unreserved statement of compliance in the notes to accounts. The same compliance is required to be given in the interim financial statement also. So interim financial statement is as good as your financial statement, your annual financial statement. The only thing is it is for a smaller period. It is for a period of the year, right? It is not for the full year, but it is again your financial statement on which your shareholders are relying. When I'm saying shareholders are relying, of course, you are giving the information You are publishing your information on the basis of these interim financial statement, right? So management has to give the explicit and unreserved statement of compliance that these financial statements are in compliance with all Indian accounting standard and interim financial statement, right? Is that clear, friends? Principle of measurement and recognition in interim financial report. Principle of measurement and recognition in interim financial report. So far we have discussed. You remember I told you the objective. In the objective, I have told you that this standard also covers some measurement and recognition aspect. So these were the disclosure aspect. Now we were talking about measurement and recognition aspect in interim financial report. Do you have any question so far? This is a very kind of theoretical kind of a standard, right? And now this is a accounting part which I'm going to discuss right now. If you have any questions so far, we'll be happy to cover that. And after that, I'll move forward. Tanisha, Vanshika, Viraj, do you have any question? Shall I move forward? Okay. So let's talk about the principle of measurement and recognition in interim financial report. The first principle is materiality. Right. The first principle is materiality. And what does it mean? Friends, for example, in the full year, the company has a profit of 500 crores. In the full year, the company has a profit of 500 crores. Right. In the interim period, the company is having a profit of, let's say, 100 crores, 100 or 125 crores. So whether materiality, right, you will consider the materiality. So whether that item is material or that item is not material, that item is significant or that item is not significant, right? 5 crore out of 500 crore may not be material. It is just 1%. But 5 crore out of 100 crore is 5%. It may be material, right? Friends, before giving the answer, I am asking to all of you whether materiality needs to be seen on a quarterly basis from the quarterly perspective means, for example, if the profit is 100 crore in a quarter and you are deciding that whether that item is material or not material in that quarter, in that interim period, whether you need to see the numbers of that quarter for comparison or you need to see the number of full year. मतलब अगर कोई 5 करोड़ की ट्रांजेक्शन है and you are evaluating whether that transaction is material or not material, will you compare with the full year profit or will you compare with that period profit for considering whether that transaction is material or not material in that particular period? What do you think? What do you think? Of course, quarter. You are right, Yatharth. So, friends, standard says that for assessing the materiality, you need to consider the numbers of that interim period only, not for the full year. Okay. Clear? Second aspect, same accounting policies as annual, except there is a change after annual financial statement. Standard says that you have to follow the same accounting policy for the recognition, for the measurement, okay, whatever you have followed in your last annual financial statement. Except if there is a change after closure of the annual financial statement, you are required to do the change. For example, till March 2019 annual financial statement, Ind AS 17 was applicable on leases. But with effect from 1st April 2019, Ind AS 116 was applicable. So, Companies have given lease accounting policy as per Ind AS 17 in annual accounts of March 19, but for interim period for June 19, they have applied Ind AS 116, right? So they have changed the recognition measurement of the leases in June 2019, right? You understood this aspect? Point number 3, revenue, seasonal, cyclical, or occasional, right? If the company is into a business which is more of a seasonal or cyclical, which is more of a seasonal or cyclical or occasional in nature, in that case, you have to recognize the revenue in the same period in which it occurs. For example, the company is into the woolen business. The company is into the woolen business. So normally what happens in Q3 and Q4, there is a huge demand. In Q1 and Q2, there is a very small demand. Okay. At some places, it may be there. So friends, the company has earned a revenue of rupees 10 crore in quarter 1, 10 crore in quarter 2, 100 crore in quarter 3, 100 crore in quarter 4. So normally the company expects, let's say the company expects that, in full year, the company will earn the revenue of 220 crores. So whether the company will accrue the revenue evenly in the 4 quarter, means 220 divided by 4, 55 crore every quarter, or the actual revenue which is earned in the respective quarter has to be disclosed. Standard says that if the revenue is seasonal, cyclical, or occasional, number 1, you remember the disclosure which I have told you, mandatory disclosure. Number 1, you have to give the disclosure. Number 2, the revenue which has been incurred in the quarter has to be shown in that quarter only. It is not required to be postponed, preponed, deferred. It is not required. Okay. So you can see that in first quarter, the revenue could be 10 crore only. In the second quarter, the revenue could be 10 crore only. But in Q3 and Q4, the revenue is much larger than in comparison to Q1 and Q2. Right? Clear? Is that clear? Is that clear, friends? Impairment in interim financial statement. Friends, for example, goodwill. So let's say the company was having a goodwill of 100 crore in quarter 1, right? The goodwill is impaired in quarter 2. Why? Due to the losses incurred in the subsidiary, but in Q3 it got picked up and subsidiary got huge orders in Q3. Friends, the company was having a goodwill in the quarter 1. Now what happened? The company has impaired the goodwill in quarter 2. So you can see the balance of goodwill is 0, right? And friends, in quarter 3, the subsidiary got, why the company has impaired this goodwill? Because the company has impaired this goodwill because there was a huge losses in the subsidiary in quarter 2, but in quarter 3 it goes better. So whether this 100 crore impairment can be reversed in quarter 3, whether 100 crore impairment can be reversed in quarter 3, what is your view? कंपनी ने 100 करोड़ का हिट लिया और इंपेयरमेंट बुक किया क्वार्टर 2 में, लेकिन क्वार्टर 3 में सब्सिडरी की पोजीशन बेटर हो गई. सो क्या ये इंपेयरमेंट रिवर्स कर सकते हैं गुडविल का क्वार्टर 3 में? व्हाट इज योर व्यू? What's your view? Can we do that or we can't do that? Friends, we can't do that. When you read Ind AS 36, it says that if goodwill has been impaired, it will never be reversed. The impairment on goodwill will never be reversed. That is number 1. Number 2, Ind AS 34 says that even if you have impaired the goodwill in any of the quarter in a particular year, you cannot reverse that impairment in the next quarter of that particular year. So अगर आपने एक क्वार्टर में गुडविल रिवर्स कर दी, गुडविल इंपेयर कर दी, तो आप उसका इंपेयरमेंट रिवर्सल दूसरे क्वार्टर में नहीं कर सकते. डजंट मैटर, दीज आर द क्वार्टर्स बिटवीन द सेम ईयर, डजंट मैटर, राइट? You cannot reverse the impairment on goodwill if you have impaired the goodwill, right? So this is what Ind AS 34 says. Number two, PP. The company has the property, plant and equipment of 100 crores. 20 impairment has been charged in Q2. Why? Because of some impairment indicator. But in Q3, the value of PP got increased beyond the earlier carrying value. So in Q2, the business was down due to some impairment indicator. The company has impaired. The company has booked a provision for impairment of 20 crores in the PP. Friends, but in Q3, the position becomes better. So can the company reverse this impairment on PP in the quarter three? Answer is yes, it is allowed. The reversal of impairment on PP is allowed. Means the reversal of impairment on other than goodwill is allowed, even in the next quarter of the same year, or even in the next year as right. So goodwill impairment not recognized, impairment recognized in an interim period will not be reversed in the subsequent interim period, even of the same year. But item other than goodwill, impairment recognized in one interim period will be reversed in another interim period if situation becomes favorable, right? Any question so far? Any question? Friends, any question? Now I am entering into the last concept of Ind AS 34, which is a very, very, very important concept from the examination perspective as well as from the real life perspective. Before that, I would like to know if you have any question so far, right from we have started the class, we have started this class till now. If you have any question, I will answer to that. After that, I'll move on. Okay. If there is no question, okay, let's move on. Income tax. Income tax calculation in interim financial statement. Before discussing this concept, please tell me whether income tax needs to be calculated on a quarterly basis or on a yearly basis. Whether income tax return needs to be filed on a quarterly basis or on a yearly basis. Whether income tax return needs to be filed on a quarterly basis or on a yearly basis. Yes, you are right, yearly basis. Income tax calculation needs to be happen on a yearly basis. Deductions, exemption needs to be provided on a yearly basis. And of course, you are right. Income tax return is also required to be filed on a yearly basis. Income tax is a kind of a matter which is taking care on a yearly basis. You are right, Rahul. Advance taxes needs to be paid, but advance tax is no more about estimation, right? So I am talking about the final calculation of tax. Is it happening on a quarterly basis? What does it mean? It means like whatever you have deposited, you have paid on a quarter, it is closed. Answer is no. It is not closed till the time the full year assessment will happen, right? Till the time the full year assessment will happen. So income tax is a full year matter. Sir, what about the quarterly financial statement? If I'm preparing a quarterly financial statement, in one quarter I have a profit, in another quarter I have a loss. So how can I make a provision for income tax in that interim period? Standard says that you need to prepare, you need to recognize, you need to measure the provision on the income tax, provision of income tax on the basis of weighted average annual income tax rate for the full year. On the basis of weighted average annual income tax rate for the full year. Right? Sir, what does this mean? What does it mean? So let's discuss this concept with the help of this example, right? From your institute study material, ICAI study material. Company A has reported rupees 60,000 as a pre-tax profit in the first quarter, right? So in the first quarter, what is the profit? In the first quarter, the profit is 60,000 rupees and expects a loss of 15,000 each in subsequent quarter. So in the first quarter, the company has made a profit of 60,000, but in every other quarter the company is expecting a loss of 15,000 every quarter, right? It has a corporate tax slab of 20% on the first 20,000 of annual earning. So what happened? The company has a tax slab. And what is the corporate tax slab? 20% tax is going to be paid on the first 20,000 rupees, and on the remaining amount, 40% tax is required to be paid, right? So this is the slab on the basis of which tax needs to be calculated. Calculate the amount of tax to be shown in each quarter. Number one, standard says that in the interim period, provision for tax has to be made on the basis of weighted annual weighted average annual income tax rate. And how to calculate the weighted average annual income tax rate? How to calculate this? How to calculate the weighted average annual income tax rate? Can anyone tell me how to calculate the weighted average annual income tax rate? So weighted average annual income tax rate is equal to your expected tax payments divided by expected tax payments divided by expected income for full year, right? For example, what is my weighted average annual income tax rate? For example, the estimated income for full year. We are standing in quarter one or quarter two, and we are estimating income for full year. Even so, sir, how will we estimate the income for full year? How will you pay the advance tax? You are paying the advance tax by estimating the amount for the remaining period. For example, in the month of June, if you have to pay the advance tax, you are just looking at what I have earned in the 2.5 months and what I'm going to earn in the next 7.5 months. Okay, or no, sorry, in the next 10.5 months, right? And actual plus budgeted or forecasted on this total expected income, you are calculating the total tax and then you are paying advance tax. So let's say the estimated income for full year is rupees 10,000 and expected tax on this amount is rupees 1,500. So what is your weighted average annual income tax rate? Your weighted average annual income tax rate is equal to 1,500 divided by 10,000. This will be your weighted average annual income tax rate, right? 15% is your weighted average annual income tax rate. Now, let's understood with the help of this example. Okay. So 60,000 is the profit in the first quarter, and the company is expecting a loss of rupees 15,000 in each quarter. If this concept would not have been there, अगर ये concept Ind AS 34 में नहीं होता तो क्या होता? आपका पहले क्वार्टर का प्रॉफिट कितना है? What is your profit in the first quarter? 60,000. So what is your tax on 60,000? On the first 20,000, 20%. So 20,000 का 20% multiply by 20%, it comes out at 4,000. And on the remaining amount, what is my remaining amount? 40% for more than 20,000. So my remaining amount beyond 20,000 is 40,000. मेरा total profit तो 60,000 का है ना, 40,000 multiply by 40%, 16,000. So on 60,000, 60,000 रुपए, on 60,000 profit, I am going to pay a tax of 20,000. 60,000 के प्रॉफिट पे मुझे 20,000 का टैक्स पे करना है, right? So I need to create a provision of 20,000 for the 60,000 rupees profit in the quarter one. ये कब होता? अगर ये कॉन्सेप्ट वेटेड एवरेज एनुअल इनकम टैक्स रेट का कॉन्सेप्ट नहीं होता. But standard talks about weighted average annual income tax rate. So let's calculate weighted average annual income tax rate. So the actual profit in the first quarter is 60,000, but the company expects a loss of 15,000 every quarter. So what is my full year profit? What is my full year expected profit? My full year expected profit is 15,000. What is my expected income tax for the full year? अगर मेरे को पूरे साल में 15,000 का प्रॉफिट होगा तो मेरा टैक्स कितना लगेगा पूरे साल में? ऑन द फर्स्ट 20,000 द स्लैब इज 20%, राइट? यही होगा ना? ऑन द फर्स्ट 20,000 द स्लैब रेट इज 20% ना? So what is my tax on the basis of expected full year profit? What is my tax? Yes, right, Ritvik. My tax is 20% of 15,000, which is 3,000 rupees only. 3,000 is my tax, no? Yeah, 3,000 is my tax. Okay. So if I'll compare this 3,000 with 15,000, what is my weighted average income tax rate? My weighted average income tax rate is 20%, right? My weighted average income tax rate is 20%. So expected income tax divided by expected income. So now how much provision I need to make in every quarter? So in the first quarter, I have earned an income of 60,000. I will apply the average tax rate for the full year. So 60,000 multiplied by 20%, 12,000 will be my tax provision. If this weighted average concept would not have been there, in that case, 20,000 rupees will be my tax provision. But since the concept is there in Ind AS 34, it says that you have to apply a weighted average annual income tax rate. So your tax provision will be 12,000 in the first quarter. In the second quarter, of course, you will have a tax reversal. Third quarter, you will have a tax reversal. Fourth quarter, you will have a tax reversal. So in the full year, it is 3,000. Sir, sitting in the first quarter, you had an expectation. For example, instead of this 15,000 losses, in the next quarter, let's say in the next quarter, when you arrive at next quarter, you will find, you have found that, the instead of the expected loss in Q2, there was some windfall gain which came, right? कुछ gain आ गया और ये loss की जगह gain हो गया तो क्या होगा? Okay, so let me change this scenario and make this problem more complex. In continuation with above case study or illustration, in Q2, instead of expected loss of 15,000, the company has earned a profit of 5,000, right? And further, the company expects a profit of rupees 10,000 in Q3 and a loss of rupees 15,000 in Q4, right? So I'm just elaborating this question, and what I'm saying that when the company reached Q2, the company has found that, oh, instead of losses, I got the profit of 15,000. I got the profit of 5,000. And further, the company expects that it will earn rupees 10,000 of profit in Q3 and a loss of rupees 15,000 in Q4, right? Now the scenario has changed. So let me again compute the expected income for full year. What is my expected income for full year? In Q3, I have the actual income because Q3 has already gone. In Q2 also I got the actual income. Instead of loss, I got the profit. And now I am expecting, instead of a loss in Q3, I am expecting a profit of rupees 10,000, right? And in Q4, I am expecting a loss of rupees 20,000. Let's say instead of 15,000, make it a 20,000 so that you will have a more clarity, right? Make this loss of 20,000. It becomes 55,000. Your full year is 55,000. Now, what is your income? So your expected income is 55,000. What is your expected income for full year? What is your expected income for full year? Your expected income for full year is on first 20,000, 20% plus more than 20,000, which is 35,000. Your 40%, right? 40%. So what is your total tax on 55,000? Your total tax on 55,000 is 18,000. You remember the tax slab? भाई मेरा अगर 55,000 रुपए का पूरे साल में प्रॉफिट होगा तो मेरा टैक्स कितना होगा? पहले 20,000 पे 20%, अगले 40,000 पे, सॉरी अगले 35,000 पे 40%, 20% on first 20,000 and 40% on more than 20,000. So 18,000 will be my full profit and my expected weighted average rate is 33%, right? So now, what is my amount of income tax in each quarter? What is my amount of income tax in each quarter? Friends, my rate is 33%. My rate is 33%. So these are my income. These are my income. Friends, Q1 has already reported. Q1 has already gone. Q1 has already gone, right? This is your expected tax. This is your tax for interim period. Tax for interim period, right? But Q1 has already filed, published, reported already. Now, sir, instead of 19,800, actual reported. Actual reported. It was 12,000. भाई हमने एक्चुअल कितना रिपोर्ट किया था? हमने Q1 में ऑलरेडी जो टैक्स लिया था 12,000 रिपोर्ट किया था, राइट? सो द remaining 19,800 minus 12,000. This has to be reported 7,800. This has to be taken in Q2. In Q2, okay. So in Q2, what will be your tax provision? 7,800 plus 1,650. So tax provision in Q2, tax provision in Q2 is equal to what? Is equal to what? Equal to shortfall of Q1 plus actual of Q2 on the basis of revised estimate, right? So this comes out at 1,700, 7,800 plus 1,650. So this 9,450 will be the tax provision for Q2. Okay. So how the numbers will look like? The numbers will be the expense, the tax expense. In Q1, it has already been reported in Q1. It has already been reported. So 12,000 will come in Q1. Okay. 9,450 will come in Q2. In Q3, estimation. This is estimation. In Q4, this is also estimation. Your total tax should be 1,850 for the full year. It is 1,855. Friends, do let me know if you have any query in this question as well. Friends, do let me know if you have any query in this question. Have you understood or you haven't understood? I have solved the illustration of from ICAI study material. I have also made this question complex. And I have also shown you the situation, sir, what happened if when we will move the estimation, because it's an estimation, it may change, right? So how to compute the tax provisions, right? I hope it is clear to all of you now. I hope it is clear to all of you now. Yeah. So Ind AS 34 says that income tax for the interim period is recognized or measured on the basis of best estimate of weighted average annual tax rate for the full year. Friends, do let me know if you haven't understood or if you have any query, then please do let me know. Have you understood how I have calculated this? This part, have you understood now? What about others? Okay. Friends, let's solve. So this was the last concept in Ind AS 34, weighted average annual income tax rate. Now let's quickly discuss illustration number 5. ABC Limited manufactures automobile parts. ABC Limited has shown a net profit of rupees 20 lakh for the third quarter of 2001. Following adjustments are made while computing the net profit. ABC Limited is a manufacturer of automobile parts, and this company is preparing the financial statement, interim financial statement for the third quarter, for the December quarter. So what this company has done, this company has a net profit of 20 lakh, right? But this company has made some adjustments in arriving at the net profit. The bad debt of rupees 1 lakh incurred during the quarter. During the third quarter, the company has incurred a bad debt. But what the company has done, 50% of the bad debt have been deferred to the next quarter. The company has already incurred the loss. But what company is doing? Company has carried forward 50%, means 50,000 rupees of bad debt in the next quarter. Can the company do that? On the accrual basis of accounting, the company has already had a loss. Can the company postpone that loss partially so that the numbers of both the quarter will look like? Can the company do that? Yeah? Vanshika, can the company do that? Answer is no. The company cannot do that. The company cannot do that. The losses has to be incurred in the same quarter. The losses has to be recognized in the same quarter in which it has incurred, right? So what to do in this case? In this case, the entire loss of 1 lakh has to be taken in the third quarter itself. So the company has already taken 50%. This 50% is again required to be taken in the Q3 itself. So 50,000 rupees loss by 50,000 rupees bad debt, this net profit will get reduced. It will be 19 lakh 50,000 only with this transaction, right? Additional depreciation of rupees 4 lakh 50,000 resulting from the change in method of depreciation. So this change in method of depreciation, is it a change in policy or change in estimate? The change in method of depreciation, is it a change in policy or change in estimate? It's a change in estimate. Very good. It's a change in estimate. So change in estimate has to be applied prospectively. So friends, in this case, what the company has done? The company has a additional depreciation of rupees 4 lakh 50,000 resulting from the change in the method of depreciation. So that is right. This is a change in estimate and it has to be taken in the same period in which it has been incurred. This is right. The company has incurred an exceptional loss of rupees 28,000. 50% of the exceptional loss again has been deferred to the next quarter. Friends, again, this is something which has already incurred. This is something which has already been incurred, right? So this 50% exceptional loss have been deferred to the next quarter. So friends, do we need to show this exceptional loss? Can we defer this 50% exceptional loss? Answer is no. So 14,000 rupees is again required to be taken to be adjusted in the profit of Q3 only. So this is not right that 14,000 rupees loss has been deferred in the next quarter. This is not right. So this adjustment is required. Point number 4. 5 lakh rupees of expenditure on account of administrative expenses pertaining to the third quarter is deferred. The company has incurred 5 lakh rupees on administrative expenses. And now the company is deferring this 5 lakh rupees on the argument that the fourth quarter will have more sales. The company is saying, in the last quarter, more sales will be there. And that is why this expenditure of 5 lakh should be debited in the next quarter. These expenditure are uniform throughout all quarters, right? It is saying that the expenditure should be uniform throughout all quarters. Friends, if the company can do these kind of things, then there is no point of preparing and presenting interim financial statement, right? Why? Because the company can manipulate and manage accordingly. And that is why standard has given some guidance as far as principle and measurement is concerned. You remember, even we said that if the company is kind of into a business which is cyclical, seasonal, even though in that case the expenditure needs to be incurred or revenue needs to be incurred in the same period in which it has actually been incurred. Sorry, the revenue and expenses is required to be recognized in the same period in which it has incurred. Right? So friends, in this case, the revenue and expenses is not required to be deferred or postponed, and they have to be recognized in the same period in which it got incurred. So this contention of deferring 5 lakh rupees is not right. Okay. So it says that ascertain the correct net profit to be shown in the interim financial report of the third quarter to be presented to the board of directors. Right. So friends, in this case, the net profit as per the question is 20 lakh rupees. Right. Bad debt of 50,000 rupees, which the company has deferred in the next quarter, is required to be adjusted. Additional depreciation, no adjustment is required. Exceptional loss of 14,000 is required to be adjusted. 5 lakh rupees of admin expenses is required to be adjusted. Your correct net profit should be 14,36,000, which is going to be reported in the third quarter. This is how this adjustment is going to be happening. Friends, I have covered all the aspect of Ind AS 34 with real life example, with lot of, layman language examples, with 2 illustrations of ICAI study material, which I found very important and relevant. If you have any question from Ind AS 34, I would be happy to answer right in the next 1 minute. If you don't have any question, I would be happy to conclude the session. Before that, let me summarize this entire standard in 2 minutes. Friends, we started with Ind AS 34, and the title of this standard is Interim Financial Reporting, right? And we have discussed that normally this standard is applicable to listed company. Why? Because as per the SEBI regulations, listed companies are required to publish their results on a quarterly basis, right? And what is the interim period? Interim period is a period which is considered as less than 1 year, right? So friends, whether Ind AS 34 says that which entity should prepare interim financial statement, answer is no. If the company is required to prepare, like listed companies are required to prepare, or the company has decided to prepare interim financial statement, then Ind AS 34 will be applicable, right? Okay. Sir, whether Ind AS 34 is applicable on the results which is filed to the stock exchange, answer is no, because those results are in the format is as prescribed by the SEBI regulations. But these results are getting prepared from the financial statement. So on these interim financial statement, Ind AS 34 is applicable. There are 2 ways of preparing your interim financial statement. Either you can prepare a full set of financial statement, or you can prepare a condensed set of financial statement. It's better to prepare a condensed set of financial statement. Why to prepare a huge and bulky financial 4 times in a year, right? So if you still want to prepare a full set of financial statement, then Ind AS 1 is applicable. If you want to prepare a condensed set of financial statement, then Ind AS 34 is applicable. So Ind AS 34 says that you have to prepare a condensed balance sheet, condensed P&L, condensed cash flow, condensed statement of changes in equity, or some limited notes to accounts, right? So in all these balance sheet, P&L, cash flow, changes in equity, I would say the format, the presentation is actually same what we have presented in the annual financials. But the only difference is the notes which are integral part of the financial statement. The breakup of balance sheet and P&L, every line item breakup is not required to be given in the notes to accounts. For example, PPE breakup is required, property, plant and equipment breakup is required if it is material. As far as notes to accounts, there are two kind of notes to accounts. Number one, period we have also covered. In this case, there are two kind of notes to account. Notes which are required to be disclosed only if it is significant or material, like impairment, reversal of impairment, capital commitment, contingent liability, related party disclosures. Okay. So purchase of property, plant and equipment, sale of property, plant and equipment. These disclosure, these breakups, these detailed disclosures are required in the notes to accounts like your annual financial statement only if the item is material. Other disclosures are also required to be made. It doesn't matter it is material or not. Like you have to give a statement that the same accounting policy is followed what we have followed in the full financials, right? Or if there is a change, you need to present the new accounting policy and you have to give the nature and impact of change. If the business is seasonal or cyclical, you have to mention this fact. Exceptional item you need to disclose, right? If you have changed any estimate like depreciation method, useful life, you are required to disclose. If you have raised any equity or borrowing, you are required to disclose. Dividend, you are required to disclose. Segment reporting, you have to make. Events occurring after balance sheet date, you have to make. So these kind of disclosure is required, right? And you have to give a explicit and unreserved statement of compliance with all Ind AS which are applicable in the interim financial statement. Materiality has to be seen from the perspective of the interim period only for the purpose of interim period. Same accounting policy needs to be followed as annual, except there is a change after annual financial statement. Revenue, if revenue is seasonal, cyclical or occasional, so the revenue has to be recognized in the same period in which it has incurred. Doesn't matter in one quarter it is bit low, in another quarter it is much high, doesn't matter. Impairment in interim financial statement, you have to check the impairment every quarter. If there is a goodwill and goodwill has been impaired, it cannot be reversed in the subsequent quarter of the same year. But if it is other than goodwill, not only PP, other than goodwill, could be other intangible asset as well. If these items have been impaired in one quarter, it can be impaired in this, it can be reversed in the second quarter, next quarters, even in the next year itself. Income tax calculation in interim financial statement, it says that income tax needs to be calculated on the basis of weighted average rate of for the full year. And what is weighted average rate for the full year? Expected income tax for the, expected income tax for the full year divided by expected income for the full year. This gives you the weighted average rate. I have discussed in detail about the period of the financial statement which is required to be presented, right? So thank you so much, friends. Thank you so much. And let me tell you, friends, by Monday, all the notes will be uploaded on the portal, right? I hope you have enjoyed the class. I hope you have enjoyed this Excel based learning, this practical based learning, this annual report, this financial results. I hope you guys have enjoyed the entire session. If you have any question, I would be happy to answer. I'll wait for the next 30 seconds. If you don't have any question, so you can just put a thank you remarks and then I'll call out the session after 30 seconds. Okay. Thank you, Tanisha, for your feedback. Guys, if you don't have the question, so let's conclude the session. Thank you so much. Stay healthy, stay safe. Thank you so much, guys. And I would request to cover all the questions from the ICAI study material. This is a very small standard, right? Very small standard. And it will not take much of the time. The concept I have covered, entire concept I have covered with the relevant question as well. So please solve the practical problem from ICAI study material. Please do the revision so that you will be able to learn the concept. Thank you so much, guys. Bye-bye. Take care. Yes, ICAI study material is more than enough. Please practice from ICAI study material. Please practice from RTP. So this is more than enough, I would say. Thank you so much, friends. And let me tell you, if you understand the concept by heart, doesn't matter. Question comes from anywhere. You will be able to crack that question. Thank you. Bye.